You don't seem terribly jazzed by this 50 basis point cut. It doesn't really rock your world.
You know, let me tell you about my day from a PM's perspective about what actually happened. So, you know, prior to Fed Day, I get 3,000 emails about what the Fed's going to do, and then the Fed does what it does, and I get emails of redlined. It's like every word that is changed is crossed out. Every new word is put in. It's like you know, they treat this like Moses coming down with the tablets. You know, the Ten Commandments still in the same order that they were in, and but it's an important communication function because the Fed knows they treat it like the Ten Commandments, so they take it seriously as well. But you know, 25 basis points, 50 basis points, and every time the Fed does whatever it does, the market has absolutely no idea what to do the very first day. And then think about today. So the market's up a lot, and rates are higher. Like, that shouldn't be. You know, if everybody's so into like what's the Fed going to do, a rate's going to go lower, so the stock market went up. Well, rates are up and the stock market's up. So I think it's worth a lot more. It's much more important about how's the economy doing, and if the economy is fine, you could buy stocks, and if the economy is going to go into recession, you can't. The rest is gobbledygook.
What do you think is going to happen, though, at this point, though? Because you think about what the bond market is doing, and it's showing you a different story. The exuberance in the stock market is not being reflected in a bond market that seems to be more worried.
That's the point.
Who's right? Yeah, but
I know the bond market
right?
is worried. The economy is okay. So why should long-term rates go down that much?
Well, tell me this. You were looking at a market not only rallying to intraday records today, you're looking at a Philadelphia Semiconductor Index up almost 3.6% today. How are rates going to impact the AI story?
They don't.
So
they don't impact it at all.
What is the sense
like I
of this
said,
trade?
people spend a lot of money and a lot of time trying to figure out what Powell's going to do, and that was intentional, by the way. And I don't think it's look. If the Fed's raising rates very, very aggressively, that's important, and the Fed's cutting rates extremely aggressively, that's important. Everything in the middle, it's just not that important. It's better to focus on the economy.
So what is your take on the economy? I mean, we saw a retail sales number the other day that I think was surprising. If you don't see that the U.S. consumer sort of beats expectations every single time, right? So the economy's growing at like a 3% clip. Unemployment's at 4.2%, right? Inflation's back down to like 2.5%. Is everything good?
Well, not everything is good.
No, but I mean,
there has definitely been a slowing in the economy.
Was it a soft landing? Was it a soft landing?
Well, there's been a slowing in the economy. The lower-end consumer is somewhat stressed. They're spending less. But, you know, there's been an increase in delinquencies, but not terrible. So on the margin, things are a little bit slower, but inflation is cooler. So as far as I'm concerned, things are fine. You know, now, there are people out there who are still saying there's a recession going to happen, you know, right around the corner, and maybe they're right. But as far as the current data is concerned, I don't see that.
This is like what Ron Temple was telling us yesterday from Lazard, that the economy has gone from really strong to just strong.
So if you have a strong economy, if you are not that worried about a recession, it seems, you have a S&P 500 at above 5,700 right now. Where does it end next year? I mean, at this point, how much more growth is there to be had in equity prices?
Yeah, I guess that's a question about valuation. I don't generally get all that exercise about where the market valuation is. You know, one thing I learned in the dot-com bust was, leading up to the dot-com bust, a lot of commentary about how things are ridiculously expensive, and all that commentary went right out the window because nobody cared. When did they care? They cared when the economy really rolled over and the fundamentals of those companies rolled over. Then everybody said, oh my God, these things are ridiculously expensive. So, and as long as the economy is fine, I think the general direction of the stock market is up. How much? I have no idea.
But as long as the economy is fine, because we were talking about yesterday, again, the parallels between maybe NVIDIA and a Cisco in 1999, right? As long as the economy is fine, that doesn't...
Cisco broke when the economy broke.
Right.
And so therefore its fundamentals rolled over. if the economy really broke, I'm sure NVIDIA's fundamentals would probably break too, and we'd be having a different discussion. But as long as the economy is okay, it's a different story.
So tell us about your portfolio then. You're not shorting anything,
No.
right? You're long like 30 to 35 stocks. You got your own little Dow Jones going there. How's that portfolio look? How do you construct it?
So Eisman Group, there are three of us. It's me, my sister, and my brother-in-law. All in the family.
Nepotism.
All in the family. And we get along pretty well, thank you.
Fits the name.
And we've become fairly thematic. I mean, we certainly have individual securities that we love, but the two dominant themes in the portfolio would be AI/tech and everything kind of related to it, and infrastructure. We think those are the best stories, and one of the things that I've said in the past is that in good times, people care about stories, and in bad times, they care about balance sheets, and we're in story time.
But in the sake of that AI conversation here too, I understand what you're saying about Cisco breaking with the economy and worries about that when it comes to NVIDIA in the future. Extreme situations. But what about valuations in the AI world? How long will it take to see more payout in the investments being made?
I actually think it's going to be longer than people think, which is actually good for NVIDIA because it means they got to sell a lot more chips. And one of the reasons why I think that is Accenture, the business that is doing poorly is their consulting business. But the business that's doing well is their outsourcing business. And the reason why the outsourcing business is doing well is that most companies, and we're not talking about the big AI plays, but everybody else has hired Accenture basically to clean up their data. That their data that they have is in different places, it's not clean, and so whatever they want to do with AI, they're not even in a position to do it until the data is structured in a way that they can then do it. We're still in that stage. So until we get past that, and then companies are going to start trying to figure out what they can actually do with AI, it's early.
It's interesting. You came out of 2008, you came out of 2020, you came out of these big market moments, and you kind of redefined the narrative, right, in terms of what you thought would be the kind of cyclical trends over the next 5, 10 years or so. Now that we're in the beginning of this historic rate cutting cycle, is this the AI economy? I mean, you're seeing so many dollars. You see it in the trade today even. This is where the money is going. What does that mean in terms of how investors have to recalibrate the way that they put money?
I don't really have to recalibrate. Like I said, good times is story time.
Yeah.
And, where are there good stories? There are those big two. There's some others, and an area where I think, for example, there isn't a great story is just in traditional banks. Nothing against traditional banks. They're all well capitalized. They're fine. They're safe. But can you construct a story that tells you that you really want to own banks? The only story that you can construct would be that Trump wins and the regulatory environment changes. And that would be good for a pop, but that's not a story.